All right, good morning, everyone, and thank you for joining and taking time to attend the Fairfax County Food and Beverage Tax Workshop. My name is Young Terry, and I am the Deputy Director in the Department of Tax Administration. Before we begin, please note that we will mute everyone throughout the presentation because we are planning to record and post the presentation to our website. If you do have questions, we ask that you ask us questions in the Teams Q&A, and we'll do our best to respond. And if also time permits, we will also have a Q&A session at the end of the presentation. And we ask that you please use the raise button in the Teams meeting so we can call on you to ask your question. And with that, I'll turn it over to Mr. Jay Doshi, the Director of Tax Administration, to start the workshop.
Hi, good morning, everyone. My name is Jay, last name's Doshi. I serve as Director of Tax Administration for Fairfax County. We really appreciate your making time to join us. As you know, our board approved the food and beverage tax effective January 1, 2026. It was approved back in May, and we would like to walk you through some of the information on that. All of you who are in our database should have received by certified mail information directly, a letter, a brochure, as well as a guideline document that has a good bit of detail. In addition, we would mention to you, and we'll get to that a little later, that we have a lot of great information on our website, which we will continue updating as we address your questions. So whether you're a business owner, whether you're a manager, whether you're a tax preparer, our hope is that this session helps you understand the guidelines and the filing process and how we intend to help you all the way so that we all can have a successful launch of the food and beverage tax. I wanted to go over to the next slide now, just to give you a quick sense of what we're going to cover, give you a background on the tax itself, some of the administrative details, the process that we intend to use if there's a delinquency, explain differences between monthly and seasonal filers, give you a sense of the definitions, the items that are subject to tax, taxable versus non-taxable, some examples, exemptions, and special cases. We especially want to touch on the seller's discount. There is a discount for timely payment and remittance and collection of taxes and filing of the return. So we'll go over that and share with you some key takeaways before we preview our online filing system. And most important, leave you with not only some important dates, but also contact information. So even after the session or at any time in the coming months, if you have a question, we have specifically set up a mailbox for the food and beverage tax, and that should make things a lot easier. As Young said, if you have questions, please place them in the Q&A. But if we do have time at the end, we also intend to take your questions live if you raise your hand. Next slide, please. Fantastic. So give you a quick overview of why the food and beverage tax came about. The board recognized that Fairfax County is heavily dependent on real estate taxes. 2/3 of the Fairfax County budget relies on real estate taxes. And of that 2/3, 75% of that tax base is contributed by the residential real estate. So when you diversify the revenue sources, it allows you to balance things out and hopefully reduce the impact compared to what it would have been on the real estate taxes. The other piece that the board saw was that given that we're in this region, about 34% of the revenues will be coming from visitors to the area, whether they're visiting or whether they are here during the day commuting for other parts of the DC metro area. we also wanted to share with you some of the regional comparisons here. Alexandria and Arlington have 5%, City of Fairfax at 4%, Falls Church 4%. Prince William County is currently at 4%, but it's going to decrease to 3% effective January 1. And Loudoun County is the only locality surrounding Fairfax County that doesn't have a county-wide tax, but many of its towns do happen to have a what is called a meals tax. So quick differential here. In towns and cities, it's called a meals tax. In counties, it's called a food and beverage tax. That's why, even though all of us generically know it as food and beverage, you will hear us use the term generically know it, I should say, as meals tax. You will hear us refer to it as a food and beverage tax. Well over 70% of localities in Virginia have implemented the food and beverage tax and or meals tax. In Fairfax County, we are a little late to the game given where the others are, but I wanted to just give you that little bit of background as we go to the next slide. I think that I'm going to turn it over to Jesse Wireman, who is going to take you through the next few slides.
Hi, good morning, everyone. I'd like to start by introducing myself. My name is Jesse Wireman, and I am the business tax manager with Fairfax County Department of Tax Administration. My team and I are responsible for the implementation of this new food and beverage tax, and we're here today to ensure that you have a clear understanding of the requirements as we approach the January 1st effective date. And I want to thank you for joining us. So what exactly are we talking about? This tax applies to prepared food and beverages that are sold as meals. We're officially kicking off on January 1st, 2026. The starting tax rate will be 4%. And here's some good news right away. We offer a seller's discount as an incentive for filing and paying on time. It's a great way to offset your administrative costs, and we're here to cover exactly how that works later on. Let's talk the administrative details. We streamlined the process. All businesses will file online with the option to pay online or by mail or in person if necessary. Your monthly returns and payments are due by the 20th of the following month. So for taxes you collect in January, your return is due by February 20th. We really want to stress this. It is crucial to file on time. If you miss that deadline, businesses are statutorily assessed. That means the county has to impose a tax based on the best estimate. Let me just get this muted quick. Sorry about that. What a statutory assessment means is the county has to impose a tax based on our best estimate, which can result in a higher tax bill and unnecessary hassle for you. Now, what happens if a payment is late? Our goal is to avoid this, but you need to know the consequences. A 10% penalty will be added to the amount due for the late payments. Plus, interest will occur at 5% per year on any outstanding taxes. And finally, please be aware that persistent outstanding balances might be referred to a collection agency, which means an additional 20% fee. The easiest path is always to pay by that 20th of the month deadline. We have two main types of filers. Most of you will be monthly filers. For this group, a filing must be submitted every single month, even if you have zero taxable sales. That's what we would call a $0 return. For seasonal filers like summer concession stands or food vendors at specific festivals, you'll only need to file for the months you've indicated you are operating. But just like the monthly filers, you must submit a filing for every month of those reported operating months, even if your sales were zero. Now let's get into the heart of the matter, the definitions. To apply the tax correctly, we need to be on the same page. A restaurant and food establishment is a very broad term. It's essentially any place that prepares and serves food to the public, and that includes caterers and food trucks. A meal is defined as any food and beverage sold for the purpose of immediate consumption. Here's the takeaway. It doesn't matter if the customer eats in your establishment or takes it to go. It's taxable either way. Finally, snack food means things like prepackaged chips, candy bars, or cookies that are sold on their own and not part of a larger meal. Keep this distinction in mind as we'll use it to determine taxability in our next section. So where does this tax show up? It applies to meals at restaurants, prepared food coming from deli counters, even at your local grocery or convenience store. It includes delicious items like desserts, milkshakes, and smoothies. Remember that beverages sold with a meal are also taxable. Looking at the list on the screen, you can see this tax touches many different types of businesses: food trucks, caterers, bakeries, sporting venues. It's not just a restaurant tax. The central question is always, is your business preparing and selling food or beverage as a meal? Now let's simplify. Taxable versus non-taxable items are generally taxable items are generally anything ready to eat or prepared and sold as a meal. This includes smoothies, milkshakes, and anything from a salad bar. Non-taxable items are usually unprepared or prepackaged items that aren't meant for immediate consumption. This covers basic grocery items like fresh produce and also beverages and prepackaged snack foods like a bag of chips when they are sold by themselves. Let's look at some real world examples. A freshly prepared strawberry smoothie from a smoothie shop would be taxable. A prepackaged smoothie from a grocery store would not be. Items from a salad bar would be taxable. Prepackaged salad kits or bags and mixed greens would not be taxable. Ice cream sundaes from a restaurant or an ice cream shop would be taxable, or groceries or such as ice cream in a carton would not be taxable. A couple more. Steak entree from a restaurant would be taxable. Unprepared meat from a grocery store would not be taxable. Soda with a burger, taxable. Soda sold alone or from a grocery store would not be taxable. A scooped ice cream in a cone would be taxable. Ice cream bought in a prepackaged container from a grocery store would not be taxable. Here's some more. Coffee sold with a sandwich would be taxable. Coffee sold alone or a bag of coffee beans would not be taxable. Chips sold with the sandwich would be taxable. Snack food sold alone would not be taxable. A turkey leg or an individual piece of cooked poultry would be taxable. Whole cooked chickens from a grocery store would not be taxable. Starting with your classic restaurant, short order, or food truck, the rules are pretty simple. All prepared food is taxable. That's your entrees, sandwiches, burgers, pizzas, soups, salads, and desserts. The only thing to watch is beverages and snack foods. Those are only taxable when sold as part of a meal. If a customer walks up and just buys a soda or a bag of chips, that's not taxable. This is where it can get a little tricky. Grocery and convenience store deli counters. The taxable items are the ones that are hot, freshly prepared, or made to order. Think a slice of hot pizza, a made to order sub, or an individual piece of hot fried chicken from a counter. What is not taxable are things meant for later consumption. They're cold, frozen, already prepackaged foods. That includes items like whole cooked rotisserie chicken, sold prepackaged, items sold by the pound, bakery goods sold in the store. Remember, selling a soda or snack food alone is also not taxable. If you operate a standalone bakery, the tax applies to hot foods, all sandwiches, bagels, donuts, and pie slices. However, items intended for later consumption, like a whole loaf of bread, are not taxable. And just like other places, beverages are only taxable if they are sold as part of a meal. We do have several important exemptions to note. Sales from vending machines are exempt. Small farmers or roadside stands are exempt if their sales income is under $2,500 annually. Alcoholic beverages sold in factory sealed containers for off-premise consumptions are not subject to this tax. Most foods that fall under the Food Stamp Act of 1977 definition are exempt, with the notable exceptions of sandwiches, salad bars, and prepackaged single-serving salads. Also exempt are meals sold to patients, residents, in places like hospitals, nursing homes, and daycare centers. This is not an all-inclusive list. A full list can be found on our website and also by reading the ordinance. Let's clear up two special cases that affect the final price: gratuity and coupons. For gratuity, if the tip is discretionary, otherwise the customer chooses it, it's non-taxable. If the gratuity is mandatory and added to the bill, only the amount that is above 20% is considered taxable. For coupons, this is straightforward. The tax is based on the amount the customer pays. So if you offer 20% off the meal, the tax is calculated on the price after the 20% discount is applied. Next up is delivery. Delivered meals are fully taxable, even if they are handled by a third party like Uber Eats or DoorDash. Here's a crucial rule: tax is based on the origin, not the destination. If your restaurant where the meal is prepared is in Fairfax County, the tax applies, even if the delivery goes outside the county. And very important, your restaurant remains responsible for applying and remitting the tax correctly. That responsibility does not shift to the delivery platform. Let's talk the seller's discount again. This is your incentive for compliance. Every seller who remits the tax on time is eligible. Right now, you get to keep 3% of the tax amount you collect. Just a heads up, the ordinance states that this discount will change to 1% starting January 1, 2028. Also, a quick note, this discount only applies to the Fairfax County food and beverage tax, not to the state sales and use tax. Here's a quick example to make the math clear. Say you sell a pasta dinner for $75. The county's food and beverage tax is 4% or $3. The state sales tax is 6% or $4.50. Now, for your discount, if you take 3% of the county tax only, that's 3% of $3, which comes out to 9 cents. That 9 cents per $75 sale is what you get to keep. When you file and pay online on our online system, this will handle the calculation will be handled for you automatically. To wrap up our section on taxability, here are 3 big takeaways to remember. If it's prepared, meals, sandwiches, ice cream, salad bar items, it's taxable. Also taxable are beverages and snack foods sold with that prepared food. If it's basic grocery items, or if it's beverages or prepackaged snacks sold by itself, it's not taxable. Now we'll be previewing the online filing process for existing business accounts. If you have filed for a business professional and occupational license, the filing process is very similar. You will start by entering your business account number and federal employer identification number or social security number associated with the business. Next, enter the contact information for the business's primary points of contacts or up to 3 alternate contacts. If the business officer differs from the main contact, be sure to enter their information as well. The Fairfax County Department of Tax Administration may follow up with the listed contacts if additional details are needed to process the registration. We encourage businesses to opt in to receive important messages from the Department of Tax Administration regarding updates and changes to the food and beverage tax. Then you will see a screen with your account information, the expected returns, and payments received. To file for a given month, you will click on the File Now button. Next, you will see the filing details screen for the selected month. Enter the total food and beverage receipts and the non-taxable receipts if applicable. The tax due, seller's discount, late payment penalty, interest fields, and total remittance due fields will auto-calculate based upon the receipts provided. Some fields like penalties and interest only apply if the return is late. And that's it for me. Thank you for listening. I'll turn it back over to Jay.
Thanks very much, Jesse. So we wanted to walk you through some of these important dates and deadlines that you may want to keep in mind. Our anticipation is that we will have step-by-step videos that will allow you to look at how you can register, file, and pay, starting about December the 15th, which is a week from today. We also expect that the registration will open right around January the 2nd. That gives you plenty of time before the February 20th deadline, but we do ask you not to wait to the last minute. This also will allow you to check a box that allows you to opt in to email messages from us. We will be selective in the email messages that we send out, and our hope is that as information updates are available, that we're getting that information to you in a timely manner as well. So that is my recommendation is to please sign in to sign up for the email updates from us. The next page you will see, okay, so we talked about the filing deadlines. We did that already, February 20th. Obviously, you can do it anytime after the 31st of January. That would help you ensure that this piece is done. We tried to make it as simple and user-friendly as possible. If you have any feedback or suggestions, we're obviously very glad to take them as we go along. Our hope is to ensure that it meets your needs, because Fairfax County is very, very interested in ensuring that the small, medium, and large businesses that remit the tax have the least effort and the most efficiency as we do this. Next slide, please. So this is critical. We're going to stay on this for a minute so you can absorb the information. Obviously, we're also we have this information on our webpage. So we have a hub where you can get all of the information that we are covering. We continue to update our frequently asked questions as we receive more questions from you. You can also find a way to call us, but then go directly to our business tax area, which is trained and will be trained to respond to your specific questions on the food and beverage tax. We've created a separate email box for you, foodandbeverage@fairfaxcounty.gov. This is for your questions. And if any of you have any concerns that another business may not be collecting or may not be collecting at the correct rate, feel free to drop us a tip, and we're happy to follow up. This is more to ensure that everyone's playing on the same level playing field. And more importantly, if they get behind, it is hard, because then we have to go to them and ask that they make up the monies that they should have been collecting from their customers. And that's obviously a very difficult thing to do, and we would prefer to avoid that if at all possible. We are available to assist you in any way in which we can. The part that we will mention to you right here is not only are we open to phone calls, emails would be preferable, especially if you're trying to get clarification on whether or not an item is taxable. We can also set up at your convenience a call via Teams, so you don't have to come anywhere. We can call you at the time that is suitable to you, and we can help resolve the question. Worst case scenario, if we find that it's better that we meet you in person, our goal is to meet you in person at your establishment so that we help you get your filing correct. All of those resources are available to you. We hope that you will use them if the need arises. Next slide, and this really, we're now going to focus in on the Q&A. So we're initially going to start with the questions that are posted in the Q&A. I'm going to turn it over to young Terry to read the questions, or young or someone in our staff. Okay, I think we have a few questions. I'm going to walk through a few of them that I can deal with. What is the website address? I think we just did that, but let's go back to the previous slide, Jesse. There you go. So the website address is fairfaxcounty.gov/taxes/business/food and beverage. Will our banking information be saved for monthly filings, or will we have to enter routing and account banking information each month? And I think this has been answered, but I think this is for security reasons. When you go to enter your banking information, it actually goes to our third-party vendor. And for your security, it is best that you not have to save the information. So at this point in time, the functionality does not save your routing number in banking information. By the way, all of the payments made through eChecks are completely free. If somehow you choose to pay by debit or credit card, there will be a convenience fee that is listed. Obviously, we encourage you to avoid the convenience fees if at all possible, because that would eat into the discount, the seller's discount of 3% that you're entitled to. Okay. So the next one, I'm going to request either Jesse or someone else on the team to respond. As a cottage baker, custom cookies sold by the dozen. I'm a bit confused. I don't sell individual cookies for immediate consumption. Rather, I sell by the dozen for showers, birthday parties, graduation parties, etc. Assume this is taxable, but not sure based on the immediate consumption piece. So would someone on our team like to take that question and address it?
Hi, Jay. For this particular question, let me wait until the feedback is off. Okay, so for this particular question, if this person could please email us directly so we can respond in writing, that would be
all
great.
Right. Fantastic. So Ms. Taylor, if you would please email us, we're glad to respond to you in writing. Next question from Mr. Amory. Is it possible to consolidate filing across multiple locations, or do we have to file for each individual location separately? At this point in time, the functionality is for each location to be filed separately. But depending on the number of you that, we could ask our technology folks if there's an opportunity to consolidate. I think that we receive information by each location, and we also receive business license information by each location. So it would be filing separately for each location. With that said, we thank you for your interest and attention. We're now going to open it up. If you don't have any other questions that you want to post through the Q&A, we're happy for you to raise your hand, and we will do our best to make sure that we see you, and we will take your question live. I think I saw someone's going to have to help me because there we go. We're going to start with one hand, and that's Mr. Prakash. Well, let's see here. No, the first one is Liz. I apologize, Liz. We're going to go from Liz to Denise to Prakash. Liz, go ahead, please. You can unmute yourself and ask your question. Thank you.
Hi, I just had a question. It's actually a two-part question. Like a customer does a transaction for prepared foods, and then so that gets taxed. They close out that transaction. They remember, oh, I want to tag on a bottled beverage and let's say a bag of chips. So they come back for a second transaction. Those don't get taxed?
Anyone want to tackle
Not
that?
in a separate transaction. That is correct.
So,
So the beverage and
yeah.
chips purchased separately would not be taxed.
So how, I don't know of any POS system that would recognize when you scan, let's say, a bottled beverage and they scan for the the code on the bottle, and it's going to recognize, oh, this one is attached to a prepared meal, so this will get the tax. And then, or if this one is not, if the same scan code gets
Right.
scanned and it's going to have not that tax attached to it,
Right.
like
So
how
Denise,
are we
if I,
expected to
yeah,
do that?
yeah, if I might, let me take that. And this has been a challenging spot as we spent more time looking at the law. We discovered very quickly that the underlying law for cities and towns is different from the underlying law for counties. And we understand and completely sympathize with the predicament you're in. There is an attorney general opinion, and the law itself is very clear that we are not able to tax that bag of chips and that standalone drink. So what we have done, and we have met with the industry and our business partners, and it appears to us that there's an opportunity to clean up the language in the law and to make it consistent with the law that applies to the meals tax for cities and counties. But until that is done, I think what's going to end up happening, and this is where it's important that and we're glad that you're joining this presentation. I think your point of sale system vendor is going to have to provide you with a set of keys for taxable, another set of keys for non-taxable sales, because we can't find a way to get to taxing them, and we sure don't want to suggest to you that you should collect the tax when we know that the item is not taxable if sold by itself.
So that barcode has to be attached some way. So all the POS system, all the programmers have to figure out a way that when they scan this one single barcode, it's
Right.
got to either qualify as it's by standalone, it's gonna not get taxed, or
Right.
if it's with a tax. Okay, so that's
Yeah,
just it's
and I
that.
apologize. Yeah, I apologize. I completely see your predicament. We have discussed this with the industry. We see that it's an administrative burden on you and your employees. We get it. We completely get it. But you're right. So I think what's going to end up happening is that either there's logic built into sold with a beverage or a meal, a beverage sold with a meal, or chips sold with a meal, or that there's a taxable button and a non-taxable button when there is a scanning done. You are correct, though. And by the way,
Okay.
obviously, if we see a whole bunch of separate transactions, you know that our auditors are going to have a question about that. I know you were talking about a genuine case where someone buys a sandwich and then decides after that transaction is rung up that they would like a bag of chips or a drink. So
Yeah,
we
what
totally
would
get it.
stop the customer from, if they know that loophole, from doing that though?
Yeah, I think that is one more reason why we need to get the language to be the same. So whether you're in the city of Fairfax or the county of Fairfax, the tax applies to the same items at the same time. And we're definitely on board with that and have had discussions already with the representatives of the restaurant industry and the hospitality industry. We do think it's something that needs to be cleaned up. Unfortunately, we just began doing the research on it after the board passed this. But we saw that back to 1997. So call it 28 years, give or take. There's been an attorney general opinion that says you can't tax these standalone sales of drinks or chips, etc.
Okay, thank you.
Okay. Yes, ma'am. Next up is John Carlin.
Yes. Kind of following back on her point. I mean, you could fix the issue by just not making any of the prepackaged items taxable in any case, because there is no way in the POS in any POS system it's tied to a specific item to make it taxable or non-taxable. There is no way for us to manage that outside of a single setting in the POS. Either we're just going to have to eat the tax when we sell it with taxable items. That I don't see any realistic way other than the businesses eating that tax and having to remit it.
So, John, I get your point. This is Jay. Here's what I would say to you. We've looked at this way more ways than we care to acknowledge, and the state law does not give us that flexibility.
Right. It doesn't give you the flexibility. It doesn't give you the flexibility to collect the tax on the item, but it could give you the flexibility to not collect it when it's included in the thing, because that's your choice to charge the tax.
That's what and I hear you, sir. And I hear you. And my response to you is, unfortunately, believe me, we've looked at that aspect too. State law does not give our board or us in DTA any option in terms of how the taxation occurs. It is all laid out. It is prescriptive, and none of it is where we can go to the board and say, would you consider, at least for a year, not taxing this? So your options become, you could build it in what you might expect to absorb in taxes into your pricing. There's nothing that says you must continue taxing at the same, charging the same price as you do, or to look at the obvious, right, which is a split. Our most drinks and chips sold together with a meal, and then make a business decision in conjunction. But I don't pretend to be a point of sale system expert. So I certainly understand your question. Okay. I get it. Yes, sir.
All right.
Go ahead, sir. You had a follow-up?
I'm sorry. I really had, that was just following up on the prior person's, but yes, I did have another question. I do have an ice cream store, and we make a lot of prepackaged, we make cakes, a lot of ice cream cakes for sale for them to, for later, but we do make them in-house. And then there are some that are prepackaged items that we do sell. Are those taxable or not?
Sure. So, Mr. Carlin, I think what staff is going to recommend is you send this in as an email. So you actually have proof as to what we said to you, and then that avoids any future complications for you and for us. But I'm going to just reconfirm with staff, if you don't mind. Let's just stay online for a second and let's make sure that that is the recommendation. Folks, Jesse, Jennifer, Young, is that our recommendation that they send in an email?
Yeah, email is always preferred, particularly if you're talking about, stuff that has to do with your business in particular and your special circumstances, because we definitely want to have it in writing so there's no misunderstanding in the future. Right now, we can give you a general answer, but the problem with that is that it might not necessarily, if I don't have all of the details, that might not necessarily apply. So that's the reason why we want to be able to take this offline and converse directly with you, so we have all of the facts to make a final determination on your question.
Fantastic. Thank you, Jesse. I appreciate that. Mr. Carlin, are you good with that?
Yeah, I'm good. Thanks.
Fantastic. Yes, sir. All right. We have Wenzhou up next, followed by Jose El Paso Restaurant.
Hi, yes, sorry. We actually came in the meeting a little late, so I just wondering if I can get a copy of the slides.
Of course. We will post the slides in the chat as a PDF after we're finished.
Okay.
Thank you.
Yeah, that's all my question. Thank you so much.
Or maybe we'll send it by email. It'll be one or the other, but we're glad to do that. Yes.
Sure. Okay. Sounds good. Thank you. Mm-hmm.
Thank you. Jose from El Paso Restaurant.
Yes, good morning. How are you, sir?
How are you? Wonderful. Thank you. Appreciate you
Good.
joining us.
Yes, a lot of the questions have been answered, but I mean, it is a little confusing in the beginning. I feel like this, like the other guy said, we might have to bite the tax in one of some of these items. But my question that nobody has asked is, how would this work for organizations that are tax exempt? Like government, schools, churches that we do a lot of catering for.
Okay. And I was going to ask if Jesse and others, is this covered in our 16-page guideline document, or would you prefer that they send an email? By the way, when you send an email, please be as specific as possible, because our goal is to get as much information so that we're accurately responding to you. Go ahead, Jesse.
So these are sales directly to a government entity. Is that what you're asking about?
Yes, sir. We do a lot of catering to, government agencies, schools, churches.
Okay, gotcha. Yeah, so I wouldn't include churches. I can answer specifically about government entities. That is an exemption that exists. So as long as they're paying with like their government funds, they could you cannot charge the tax in that case, because government entities are exempt from paying the tax. That does not extend into the other areas like churches and other nonprofits. There's no specific thing in the code about those. It's only government entities.
Okay, so Jesse, if I could ask a clarifying question on Jose's behalf. If I'm a government employee, I purchase the food, then I might apply to get reimbursed. I'm going to have to pay the tax, but if the government directly cuts a purchase order or sends a check or issues a form of payment, there's no tax. Is that correct?
Yeah. So yeah, an individual employee using their own funds, even if they are in employment and they tend to get reimbursed, you have to charge the tax in that case. It has to be paid directly with government funds.
Okay. So Jose, please keep that in mind, and also for all the rest of you who are doing business with government entities and the like. And Jose, my recommendation to you would be, please send your question relating to churches by email if you want further clarification. But as Jesse Wireman explained to you, the exemption applies to direct purchases by governmental entities. You should not be charging them a tax. Okay, I'm going to go ahead,
I'm
sir.
sorry. Just to clarify. So if they come in and place an order, we have to punch in, obviously, in the POS system, their tax exempt number. Is that how we prove to you that they were tax exempt, or how would this work?
I mean, typically what would happen, right, is you're going to have some support for the fact that they're tax exempt, because you don't want to be left holding the bag on the taxes if you didn't collect them. So whether you have a separate account set up and you have proof of tax exemption, and that's available in case we need to review that, or some other mechanism, but we would definitely recommend you have the backup for that. And then, of course, as you're reporting it, you're going to show that those sales were tax exempt.
Okay, got it.
Okay, yes, sir.
Also, just like another clarifying thing with that, and I understand that for the state, the Virginia sales and use tax, there is an exemption that they do issue that does not apply to food and beverage. You can't use the state sales tax exemption for food and beverage purposes. I just wanted to highlight that as well.
Thank you, Jesse. Thank you. Okay.
Okay, thank you.
Again, yeah, any more specific questions, Jose, feel free to use the email. It will actually serve you well, serves us well, and then you have proof that you asked a question, you gave us the detail, and then we responded to you in writing.
All right. Thank you, sir.
Thank you, sir. Yes. I have next up Kevin Morris, followed by Office 5137. Kevin Morris.
Thank you.
Yes, sir.
I'm looking at the definitions as outlined in Chapter 4, Article 31, Section 2, and you say that beverages include non-alcoholic beverages served as part of a meal. Under your definition on the next page for meals, You say food and beverage, including alcohol beverage, offered for sale for the purpose of consumption by a single person, whether or not eaten, et cetera, et cetera. Meal does not include grocery items, snack food alone, or beverages alone. If the establishment is basically an a la carte facility, so I go up and get a deli sandwich, it's not part of a combo, it's just a standalone sandwich. And then I get a bag of chips, and then I get a bottled beverage. All these items are single items. They are not a combo. They are not grouped together in any way. Would it be that the sandwich is subject to tax while the beverage and chips are exempt?
Yeah, I think Jesse is the expert, but my initial sense is that all of it is subject to a tax, regardless of whether it's sold as a combo or not. Let's get the experts to weigh in so that you're getting it straight from them. Jesse?
Yeah, I mean, if that's sold as a single transaction, all items would be taxable in that case. Now, it can get kind of interesting though, because you could have prepared food items and what we would consider grocery items under a single transaction. So, like for instance, if you were to combine that with with a Starbucks, you got coffee, a muffin or a breakfast sandwich, and then you also got coffee beans with it. I mean, the coffee beans in no circumstances would ever be taxable. So you could have situations like that. But the example that you gave, the assumption would be that this is being basically sold in combination, even if that's not necessarily the intention, because you did mention it's a la carte. People are sort of picking, and but as soon as a prepared food product is part of that transaction, everything in its orbit gets sucked into it, unless it's a grocery item.
Okay.
Mr. Morris, does that help you, sir?
Yes, but I do have a follow-up question, if I can.
Yes, sir.
Yeah. So if I am just purchasing a cup of coffee from Starbucks, that is not exempt based off of the examples you provided earlier. There's no other prepared food and beverage. But if I get a loaf of bread or tea cake or something with my coffee, then the entire transaction becomes taxable.
That is correct.
Yes. Yes.
Okay. So as long as we have the introduction of prepared food into the transaction,
Yes,
not
sir.
necessarily the meal, but in the transaction, as long as
Yes,
there
sir.
is a prepared food on the transaction, the entire transaction is taxable at the higher rate. Without the prepared food, the tax is null and void and exempt.
Correct. And only in counties, and this is the part that's been challenging for those who have multiple locations, and we apologize for that. But as we dug into it, we found that there was no way for us to be on the same taxation playing field, if you would, between cities and counties. But yes, sir, Mr. Morris.
Great, thank you.
Yes, indeed. Okay, we have Office 5137. If you don't mind, if that's not your given name, if you could identify yourself, that'd be wonderful. And glad to take your question next. Office 5137. You're up next. I'm not hearing anything. I see a hand up. I'm not hearing anything. Okay. We're going to go back to Denise. Hey, Denise, welcome. After you ask one set of questions, it's $10 for another question. No, just kidding. Please go ahead. Please go ahead.
So if I have a private chef that walks into a location, meaning say a personal residence, and she walks in with her set of knives only, the food is already there. She prepares the meal, presents the meal, and walks out with nothing but her knives. Is that taxable?
Are you saying there's no money changing hands? Or there is money changing?
She charged for the event. She charged for the, say, dinner party, but she didn't purchase any of the food. The client purchased all of the food.
Okay.
And she prepared it and walked away. Is she responsible for the meals tax?
So in essence, you are charging, or the chef is charging
for my
their
service.
time
Yes.
and their knives. Is that what I heard?
That is correct.
Okay, and with no food whatsoever, This is not a catering business. This is simply a chef who comes in with the knives, goes back with the knives. So I'm going to open it up to this group, to Jesse, and ask if he wants to weigh in or if he would rather have an email from you. Let's go ahead. Jesse?
Yeah, probably an email might be good with that. I'm not sure
Okay.
I completely understand the question. So yeah, I mean, I
Okay.
think an email would be better. Yeah.
Fantastic. All right,
Okay,
Denise,
and I'm gonna
you know our
email the
email
food and
address.
beverage, and I'm just wanna
Please.
clarify, I'm gonna email the
Yes.
food and beverage at the Fairfax County. Okay, yeah,
Correct.
because there could be different scenarios for that. Thank you very much for your time.
Exactly. And yes, indeed. And if you have more than one scenario,
Yes,
it would help for us to get all of the scenarios so we're able to work through the analysis all at one time with you.
okay, perfect. Yep, as you can see, I kind of shot a few questions, so I will put that all in an
It's fine.
email over to you.
It's all
Perfect.
good.
Thank you
I
so much.
counted. I've counted. You're at $50 now with all your followers. We're good.
Thank you very much.
Indeed. Okay, coffee in INC is the next one, unless Office 5137 is going to speak up. Coffee in INC, you're up next. Please unmute yourself and feel free to ask your question.
Okay.
Coffee in INC.
Hi. I have a question. I have a coffee shop in Alexandria. So
Okay.
now on, I am going to do taxable percentages, 5% for Alexandria.
Ma'am, just to be clear, are we talking about the Alexandria part of Fairfax County, or are we talking about the city of Alexandria?
I am in city in Alexandria.
I'm sorry?
City in Alexandria.
City of Alexandria.
Yes.
I would not want to speak to their taxes. I do know their rate is 5%, but I would recommend you call their finance department and they can help you. So you should have been collecting and remitting the tax. You should have been paying the tax all along. Is that correct?
Yes.
Okay. So do you have more than one location? Do you have another location in Fairfax County?
No, I have just one location in Alexandria.
Okay, so if you have just one location in Alexandria, I would say to you that none of what we talked about should apply to you if it is in fact in the limits of the city of Alexandria. And I would recommend that you contact their finance department and get confirmation as to your location so that there's no confusion whatsoever.
Okay, I have another question for retail.
Yes, ma'am.
I have also gift baskets comes with coffee cups, coffee beans, T-shirt, and Turkish delight, all the things. Is taxable or not taxable?
So, ma'am, just to be clear, our tax applies to food and beverages. Maybe this is an opportunity for me to clear something up. In Virginia, cities and counties are independent of each other. So the city of Alexandria is a standalone entity, and therefore anyone who is within city of Alexandria limits is not required to collect a Fairfax County food and beverage tax. So, ma'am, I believe that your best bet is even on the items you asked, which I think are going to end up being non-taxable, but I don't want to speak for the finance department in Alexandria. May I suggest that you contact the finance department in Alexandria? If you want, you can send us an email and we'll be glad to send you the contact information for them.
Okay, thank you so much.
Yes, ma'am. Okay, I have Jennifer Trexler next. Assuming that Office 5137 is still thinking about whether they want to ask their question. Ms. Trexler.
Thank you very much. The question I had is more hotel related. If we have complimentary breakfast included in the rate, where the restaurant's actually bringing it up as a retail item, but billing the hotel for it, would that end up being tax exempt since the hotel rate was already taxable?
Are you collecting a sales and use tax on that?
We're collecting occupancy tax on the hotel rooms,
Okay.
which includes the breakfast.
Okay. So my recommendation to you would be if you just lay this out for us by email, we can respond to you. I think I know the answer, but I don't want to be wrong. I'd rather you get the correct answer. So you have our email address. Would you be able to send us an email?
Absolutely.
I
Absolutely. Yeah, I
appreciate
can do
that.
that.
Thank you very much.
Thank you.
Okay. Yes, indeed. Next, I have Roberta Puente.
Yes, hello.
Hi, how are you?
Good, thank you for asking. My question is, okay, we're a dine-in restaurant,
Mhm.
and the bill, it has to be specifically saying that food and beverage tax 4%, and then Virginia sells 6%, or we could just put like 10% of just sales tax.
I don't know that there is a specific requirement, but I think it could get confusing for your customers if you did not have the two lined up. I don't know that we can tell you that it must be one way or the other. But I'm just going to reconfirm from Jesse or anyone else on our team.
Right. I mean, there's no specific like requirement for that, like at least like not in code or anything. Obviously, from a your customers may appreciate it if you broke it out. I mean, if it's not practical for you to do so, there's nothing that requires it. All I do ask is that you don't send the tax to the same place. You need to make sure you send the Fairfax County portion to Fairfax County and the state portion to Virginia. That's the most important part.
Great point.
Yeah.
Great point, Jesse. Thank you. Yes.
Okay.
Ma'am,
Oh, well, okay.
ma'am, does
I
that
guess
answer your question?
Yes, I guess I'll have to check with the POS if they could do the Pacific.
Exactly. Most
thank
POS
you.
systems that we know of will be able to accommodate both the sales tax as a separate line item and a local food and beverage tax as a different line item. Thank you, Roberta, for your question. Next up, we have Carmen.
Hi, thank you for putting this webinar together, by the way.
Gladly.
My question goes related to this tax based on origin. So if you have a case of a large catering company that works all across the DMV, if, you know, a lot of times the catering companies could be preparing like prepared breakfasts, lunches, dinners that might include, you know, 100 things of bottled water, chips. How does that really handle, like, if I do something big in a DC event, is it still going to have that additional 4% tax tacked on because my business is located in Fairfax County?
Right. And to be clear, what's going to happen is the law of that given city or county will apply. So if, as an example, you had another kitchen in DC, chances are you're going to pay the DC tax, even if they don't call it a meals tax. I realize that it's a much higher sales tax. So short answer to your question is yes. Everything, if you're located in Fairfax County for that particular kitchen, if you have multiple kitchens, it's going to be based on whether that one kitchen is located in Fairfax County, another one is located in, let's call it Alexandria or Arlington, or DC.
Okay, so it would kind of be based on that kitchen, not necessarily where the event is.
That is correct.
And then I had asked this question also in the Q&A, and the response I got, it also said that unless sales are being conducted at the event outside the county, then those sales wouldn't be taxable. I really didn't understand that response.
I don't believe that is what would apply. I would recommend you send an email. And this is exactly why an email can help us clarify that. If you're a caterer, I believe the answer, and Jesse is here to help me out, I believe it's an all or nothing. If you're located in Fairfax County, the Fairfax County tax applies. If you're located in Arlington County, you're going to charge a 5% for any sales that you make in Fairfax County, but you will not pay Fairfax County even if you serve the meal in Fairfax County.
Okay. And then what about like if that catering company is preparing prepared meals for future consumption, like frozen meals or things like that that people can buy from the catering company. Because I know like during COVID, a lot of catering companies did that, and a lot of them are still offering those services.
So I think this one gets to a level of detail that perhaps we'd want to work with you to understand a little bit better. So if you don't mind shooting us an email, we're glad to get you an answer on that after we understand. I think I understand at a high level your question, but that's what I would recommend.
Thank you.
Indeed. Okay, I have next up Mr. Hamid Zia.
Yes, hi.
How are you?
Good, thank you. And thank you for this webinar. We are actually new to this game. We are going to start our business in January. And thanks to you guys, we got a nice New Year gift in the way of 4% tax. So a couple of questions. First, we are going to use a commercial kitchen, which I believe is still in Fairfax County, but I'm not sure if it's part of any other entity or not. But our business location is in Falls Church, which is not city of Falls Church, just Falls Church, which is Fairfax County. So my general question is, does it matter where the food is prepared as opposed to where the business address is?
So I am ultimately, do I understand you? By the way, just to be clear for everyone's benefit, this is a trust tax. And yes, you are remitting the tax to us and getting a seller's discount. But I do want to clarify something very basic so we're all on the same page. And that is, the tax is not a tax on Mr. Hamid and his business. It is a tax that is collected from the ultimate consumer of his restaurant. So I do want to, and for all restaurants located in Fairfax County. This is not a tax on the business. It is a tax on the patrons of that business and is collected with each individual transaction of a prepared meal. Your question was, if I understand you correctly, you are selling the food at your restaurant. The food is coming from somewhere else. The sale occurs in Fairfax County at your location. Did I understand that correctly?
Yes, except that we do not have a restaurant. It will be, the food will be prepared somewhere else in a commercial kitchen and then delivered to customers wherever they are. But the business address is in Falls Church.
In Falls Church in Fairfax County.
Right.
Okay. I think I know the answer, but I'm going to ask Jesse if he prefers to have this by email so there's no confusion.
Okay, so like when you say business address, I just want to kind of elaborate like what that mean, what you mean by that. Is this like a place that's open to the public, or is this like a residence or something like that?
Right. So the reason why we are using a commercial kitchen is because our kitchen is not suitable for commercial use. So this is a residence address, and the deliveries will be initiated from here. So we prepare the food in the commercial kitchen, we bring it to our residence, the delivery people will collect from us at our residence.
Okay. Interesting. Yeah, I would put this, I would pose this one in an email. I have an idea of how I'm going to respond to this, but I do want to kind of like reflect on it a little bit because it does have interesting implications to it. But thank you for the question though. But I would, if you could email it to it or give us a call, whatever you prefer, we'll look into it for you.
An email preferred any day. So thank you.
Email is, but yeah, preferred.
Of course.
Yes.
You want to share your idea for the moment?
No. We don't do for the moment. That's what gets us into trouble. If we start doing for the moment and we end up then giving you a correct answer later on, that's going to cause confusion. That's the last thing we want to do, Mr. Hamid.
Understood. I just have another question, which is quite short. Because we are new, I think the word immediate consumption is a little bit confusing because when you deliver the food, the customer may want to eat it immediately or the next day or whatever. So that doesn't matter if I understand you correctly.
I think the point is that it's capable of being consumed immediately.
Right. Okay. Understood.
Okay.
Thank you.
That's what we're talking about. Yes, sir.
Right. Thank you so
So
much.
if I go to a grocery store and I buy a gallon of ice cream, yes, I've been known to eat a gallon of ice cream when I shouldn't be.
Okay.
But generally it's a grocery item, right?
Right. Okay.
I think that's how it's trying to make the distinction.
Understood. Thank you so much.
Thank you, sir. Yes, sir. I have Jennifer up next.
Hi, thanks for doing this, and I really appreciate the first question that was asked about with taxes and point of sale. I joined the meeting here today about 10 or 15 minutes late, so I apologize. I have a couple of quick questions that I hope can quickly be answered. So
Okay.
I own a restaurant. We also sell food, you know, people can take meals to go. We also sell beer and wine, and the
Yes.
beer and wine can also be bought for off-premises consumption. So I have 3 quick questions here. For a lunch special, if folks don't get anything to drink with that, would the tax apply? The
Short
next
answer,
question.
yes.
Pardon?
If it's a meal that you're selling with or without a beverage, the answer is yes, the food and beverage tax would apply.
Okay, if folks come in and just order, have a glass of beer or, you know, a pint of beer or a glass of wine, and don't get any food, does the tax apply?
So if they're not getting wings or pizza or something else with that, the tax would not apply.
Okay.
If it is
And-
beverages sold alone.
Okay, and then
Keep in mind, you also have ABC requirements on X% of your food, X% of your gross receipts must come from food, et cetera, but we're not going down that path right now.
Right, and we don't have an issue with that. I'm just saying if somebody stops in after work and has a beer
Correct.
or two and then heads on their way
Yes.
home. And
Yes,
then,
go ahead, please.
So the tax would not apply, correct?
That is correct.
Okay. And then packaged alcohol, if folks come in and buy packaged beer or packaged wine to take home, the tax does not apply, correct?
Jesse, I'm going to defer to you if it is. Again, I think the question is whether there's a sale of food alongside that, but I'm going to defer to Jesse on that one.
Yeah, if the wine is uncorked, you know, it's still sealed up. Same thing with the 6-pack of beer. It's not opened. Even if that's being purchased with prepared food, it would not be taxable. It would that would be what we. And there's an exemption specifically for this alcohol for off-premise consumption. Is already a specific exemption in the code, so that would apply in that case, even if it's being sold along with the prepared food item. It's just if you were to pour it into a glass or open up the wine and pour it into a glass, then that's different. That would be taxable in that case, yes. Okay,
and to be clear, Jesse, just to make sure I get it right, Jennifer, on your behalf, if I'm getting the packaged wine and getting some food with it, the tax still applies to the food, but not the wine, is what I heard. I just want to be sure I'm understanding that correctly. Yes. Okay.
Yeah, it would be like that situation where it's like, even though it's in the same orbit as a prepared food item, there's a specific exemption for basically alcohol for on-premise consumption. That exemption doesn't go away just because there's a prepared food item being purchased along with it.
Got it. Thank you so much. I have Marion up next. Jennifer, I'm sorry, go ahead, please, if you have a follow-up.
One last quick thing. I think the conundrum happens, this goes back to that first question or two, is someone comes in, they have a beer, get some food, and then as they're leaving, they want to add on like, oh, I want to take some packaged beer home with me. The tax would not apply to the packaged beer, but applies to their food and beverage that they had at the restaurant.
Correct.
Yeah, I think that's where the conundrum is with the point of sale systems and taxes. Thanks.
and we apologize, but you know, until it's fixed, this is the hand we've been dealt. So we don't want you to tax something that we know is not taxable, right? All right, we have Marion up next. Thanks for your patience.
So piggybacking on Jennifer's question of packaged beverages to go, for breweries and restaurants with breweries that sell growlers, those are filled and packaged at the restaurant, not in a factory, but they're sold for to-go purposes only. Is that taxable or not taxable because it's not factory sealed?
Right, I understand. Thank you, Marion. If you don't mind, let's hold. I am least qualified to answer this since I don't drink, but I think Jesse has dealt with the question, so I'm going to ask him if he has an immediate response or if he prefers that you send in an email.
Yeah, with growlers, we have actually thought this one over. So basically, I mean, a growler by itself is a beverage. So, I mean, if it's the growler by itself, then it's not subject to the tax. But if it is being purchased along with the prepared food item, in that case, we wouldn't consider it factory sealed. So it would become a taxable event in that case, if there's a prepared food item purchased along with it.
All right, folks, we are now at 13 minutes past our allotted time, but we're glad to take a couple more questions before we wrap up. We do appreciate everyone staying on that has stayed on. Any additional questions, please raise your hand. Fantastic. Well, you have been an excellent crowd to work with. We greatly appreciate it.
I'm sorry.
Go ahead, please.
Hi, good morning.
Who is
So
this?
this is Marie Hines Kamara from Jazz and Pam Caribbean Flavor.
Hi, Marie.
Hi, just a quick question. I just wanted to ask, I currently did a new location, and now we're in another side of Fairfax. We left from the city and now we're in another side of Fairfax. So my question is, paying this this tax for the county, how do I proceed with that? Because normally I used to pay the tax for the city, but we're not in the city anymore. So where would I be filing this? Same with the Virginia state?
Okay, so no. So I'm glad you asked the question. Just to be very, very clear, this is a tax that is due to Fairfax County. So what you would do is you will register for the tax. You will register to collect the tax. We will send you information. And the first month's sales, the month of January of 2026, the return is due online. The return is due online by February 20th. It is an online filing and payment system. And we encourage you to register as soon as you can after the system opens up for registration in the first week of January of 2026.
So yes, so we are not officially opened yet, but however, as soon as we're opened in that location, we'll be able to do that. But I'm happy that because I didn't know how to remit those taxes.
Yes.
Since this is new to Fairfax County for January.
I appreciate your question. Folks, again, just to reiterate, you do not send the Fairfax County payment to the state of Virginia and the Virginia Department of Taxation. Their money goes to them. Our money comes to us. And we're happy to walk you through that if there's any confusion on your part or that of your bookkeepers. But please do keep those two separate because you don't want to be in a situation where you don't get your 3% seller's discount for timely remitting. Okay, you'll get a 3% seller's discount for remitting timely to Fairfax County.
Okay, so yeah, that's another one. So if we file the taxes before the 20th, then the 3% the 3% will be applied, right?
Exactly, yes. And the online system will recognize that you are paying on time. And that is why you will find that it's going to do the math for you, and you will be able to remit only the net amount and keep the 3%.
Okay. All right. Thank you.
Thank you. Okay. I think, folks, I do not see any hand. So again, you've been a terrific crowd. We greatly appreciate your listening in and some terrific questions. Just to recap, number one, please register as soon as you can after the first week of January. Please sign up, opt in to our emails. And third, the first return for January is due by February 20th. We have a whole host of information on our website. Please take advantage of the resources that you have. We also have a lot of FAQs, and we will continue posting as we have more information for you. And the most important part in all of this is if you have any questions, please don't hesitate. Our goal is to ensure that we make this transition as easy as possible for you and your businesses and your bookkeepers. Okay, I see one more hand. Prakash, you have the final question of the day. Thanks for your patience.
Yeah, thanks for the opportunity. I just have one question. If the church has a food establishment permit, they're not selling food outside, it's prepared only for the congregation on specific dates. Is the county going to issue some document saying that they're exempt?
So I just want to make sure I understand the question. Are we talking about
a church,
the food
a nonprofit
that is,
church?
No, I understand. That the food is given for free, or are we talking about sales of food by the church? Two different situations.
Yeah, it is basically a low-cost food sold to the congregation for their convenience.
Okay, just to be clear, so
And
you're talking about sales,
the funds are strictly used for the purpose of the mission itself.
I understand. So yes, so what I would recommend is send us a question. If, as an example, and I'm going to use the Sikh Gurdwaras as an example, you go into that place of worship, food is given to you, there's not even a nominal charge. That one, there's no question whatsoever. There's no meal stacks of any kind. I think where I need us to think about this is if there is a charge, nominal or not, so that we give you the correct answer. But for any church services, any worship services, if food is provided at no cost, there's absolutely no tax due whatsoever. I would appreciate your sending an email to us so we can look at that question and get back to you.
Okay, thank you very much. I appreciate it.
Thank you, indeed. Okay, folks, we're at 11:19. We thank you for your attention. We thank you for your participation. Any follow-up questions, please let us know. I'm going to, before I close, I'm going to ask Jesse, Young, and Jennifer if they have anything else they would like me to bring up before we close for the day.
Just one thing, Jay, I do want to point out that we will be posting this presentation along with the copy of this PDF version on our website, and we will inform everybody who is on this call when it is posted. So
fantastic.
That's it.
Thank you all for joining us, and we will stay in touch. So we will post the PowerPoint slides or send them to you by email. We'll figure out which of those two. But we will have the slides up first, most likely, and to the extent we may need to do a little bit of editing, etc. It may be a few more days before we post the entire session for you. So thank you all. We hope you have a wonderful day. For those of you who have friends who weren't able to make it, our next presentation is on January the 5th. It is in person at the Government Center. Young, you want to help me with the time, please?
Just pull it up.
Or anyone.
Respond.
Jay, it will be in conference room 2 and 3, January 5th, from 3 to 4 o'clock.
3 to 4 p.m., January the 5th. would be our next session. So thank you all. If you have friends who missed this, they're welcome to come in person. We thank you. Goodbye.
Thank you.